All right, welcome. We are going to begin our third workshop in the financial literacy workshop series that Let's Talk Money is providing. Thank you for joining us, those that are here in person as well as virtually. So if you haven't seen the previous two workshops, you can go to the Youth Council's YouTube channel, which is at Simi Valley Youth Council, to watch the previous workshops, and this one will be loaded up after we're finished. I'd like to introduce our presentation leader for tonight. She is a student at Simi Valley High School, and she's also the author of a book, and she will talk about that when she gets up, but all about teen investing. So I'd like to introduce Shreya Jalakant.
Hi, everyone. Thank you for attending tonight's workshop. So we'll begin our presentation shortly. Today, we're going to be learning about the stock market and investing. It's a basic concept. This is not really a workshop for advice on investing, because that is something that's a little risky, but we're going to be talking about the basics of investing and how to get started. All right, so what is investing? Investing is when an asset, which is typically money, is allocated to something with the intention of getting profit or money. And so many people have gained lots of money while investing instead of simply just keeping your money in the bank and letting it sit there. But you can lose some money while investing, so it isn't just all like fun games. So there are different types of investing, some of which include real estate, which is basically buying real estate at a lower cost and then selling it at a higher cost based on the economy and the market. You can also invest in cryptocurrency, and this is something that usually kind of has like a negative connotation because you can lose a lot of money in this market, but there are like Bitcoin millionaires, like a lot of really rich people because they invest in cryptocurrency, but you have to be really careful and do a lot of research. And one of the most popular forms of investing is the stock market. And the stock market is basically where publicly listed companies will put out shares of their company. And a share is a percentage of company ownership, and it's going to be put out onto the stock market. And you can basically buy a stock, which is like a percentage of ownership in a company at a low price, and then sell it when it's at a high price to make more money. So a Roth IRA is an account which is saved for retirement, and a Roth IRA can be opened by minors, and this is called a custodial Roth IRA. Usually an adult who's around 18 years old, or some states you have to be 21 or 19, opens a custodial Roth IRA for a minor. You can't open one for yourself, but you could have a parent or an older sibling open one for you. And then custodial Roth IRAs are the same as standard Roth IRAs, but the minimum investment is lower. So teenagers can invest in custodial Roth IRAs if they have some earned income. And this is typically from a part-time job, like lawn mowing, babysitting, something like that, where you make money. And the adult custodian will control the account, but the money you make from investing will go into an account such as the custodial Roth IRA. And you must file a personal income tax return if you make more than around $13,000. So it isn't all tax-free, but until around $13,000, you will not have any taxes on the profit you make. So what exactly is the stock market? I know I mentioned it briefly early on, but the stock market is basically a place where you can buy and sell stock, which is a share of a company. And then you do this to earn like profit. Is not just for fun, because it can be very risky. And then a stock represents like partial ownership of a corporation, and a corporation is a company owned by all the stockholders and not just one person. Like if you guys have heard of a sole proprietorship, that's owned by just one person, but if it's a partnership, it's owned by two people. But a corporation, a publicly listed corporation, is owned by a lot of people. Compound interest is earned on the stock when it's reinvested with the principal. I know you guys may have learned the compound interest formula in school, and I'm not sure if you enjoyed that, but that's basically how your income is taxed. And a bear market is when the stock prices fall consistently. So this is not good. This is what happens if you don't properly do research. And sometimes even when you do, you can like lose a lot of money. So that's why it's risky. But if you do proper research and with a little bit of luck, you can make a lot of money. And it's a lot better than just keeping your money sitting there in your bank account and doing nothing with it. The pros and cons of investing in the stock market. So some of the pros is that it's one of the easiest ways to invest money. It doesn't require a lot of education. It's a lot of just research, practice, and you can do some courses online too if you really wanted to. You can make a lot of money in an instant, but the stock market also, it can like the money, the shares increase in price really quickly and fall really fast. It's very volatile. It's not very reliable. And you can also invest little bits of money at a time, like real estate, where you're buying like a whole house or a whole building, and you have to just trust that you will get your money back when it's a lot of money. That's just hard to have at your disposal all the time. And investing, one of the main benefits of investing is that you can stay ahead of inflation. So there's a common saying that investing outpaces inflation. We'll talk about this more later in the presentation, but just keep that in mind. Some of the cons is that it takes a lot of research and time to make proper purchases because, you know, there's a really big chance that if you just go into it like first, just without any knowledge or research, you could just lose a ton of money. Taxes may apply when selling stocks. This is not in all cases, but there is a chance that this happens. And you're also competing against professional investors who've been doing this for like so many years, and like not everyone like is going to be as successful as them. So you got to keep that in mind when you hear all those success stories. Don't get carried away. You have to know that it's a lot of time, energy, and dedication. So an ESG investment strategy. This is one of my favorite things to talk about actually, because this is very relevant right now. So an ESG investment strategy can be kind of summarized as an investment strategy, which is very socially aware and also promotes good companies, which focus on the three values or ideals of focusing on the environment, the social climate, and governance. So firstly, the environment. So this is like, what kind of impact does this company have on the environment? Like, is it like, you know, polluting everything? Is it stealing land? Like, is it doing a bunch of unethical things and ruining the world? You don't want to invest in that type of company. Even if it does make a lot of money, I just don't think that's worth it, because, you know, you want to help support companies which are going to make the world a better place. The social aspect of this is, how does the company benefit the broader community and the people, the employees inside? And thirdly, governance is looking at who is leading the company, like who is the CEO, who is the CFO, how are the employees treated? How does the board of directors deal well with the stakeholders or shareholders? Like, that's really important to keep notice of and make sure that the company is an ethical company who is treating their employees and everyone else around them well. So what's the difference between a hedge fund and a mutual fund? So this is something that initially when I was learning about this, I was kind of confused, because the difference is like, there's a very fine line between the two. But a hedge fund is a private investment only available to accredited investors, and they're a lot more risky, but you can make a lot more money or lose a lot more money. And to be able to invest in a hedge fund, it's basically where you need to be able to have $1 million as like a net worth, or $200,000 plus for your salary to be able to invest in these private hedge funds. So this is where like someone else would invest your money for you. And a mutual fund is available to the public and daily trading. Like, it's just like something you can do on a daily basis. There's more securities available, such as stocks, bonds, and the actively managed mutual funds have high fees, like not as high as hedge funds, but they're still pretty high. It's not like something that everyone can do. And these funds are only traded at the next available asset value. So as soon as the price increases of the stock increases or decreases, they're going to be just selling it. So this can also lead to some losses because it's not a very long-term thing. So this is the thing I talked about earlier, where investing outpaces inflation. So one of the main reasons that investing is so effective is that when you do earn money through investing, it's compounded. It's not like a flat rate. And inflation, think of inflation like a tax. So the rate at which money you invest grows is significantly greater than the rate at which money loses value due to inflation. So as a result, it is much more effective to invest your money than just keep it in a bank, because your money will lose value in the bank, because that's just how the economy works. And historically, like, unless we're compounding our money, we're losing some of it. Like, all the money you earn, think of it like this: you earn money, but you lose like a percentage of it just because of inflation. But if you want to remedy this, investing your money will allow you to make more money and also outpace inflation. And yeah, actively investing it is a great way to outrun inflation. So the two types of analysis that a lot of professional investors focus on are qualitative and quantitative analysis. You guys have probably heard of these terms, but a way to describe it is qualitative analysis is any type of analysis that doesn't refer to numbers. So a lot of times ESG investing is analyzing the company qualitatively, while looking at the numbers, how much you make and how much you lose, like reviewing financial charts, is quantitative analysis. And qualitative analysis also just can look into corporate decisions and alliances which are formed. And quantitative analysis, a lot of times if you've seen like investors looking at those like charts, you kind of just look at how much is the stock like going up, is it going down, looking at the numbers side, like how much money will I make? And qualitative analysis will allow you, like, is this a good company that fits my values? Do I see potential for growth? Stuff like that. And both must be taken into account when analyzing a company. One or the other won't suffice, because, you know, even if a company looks great at the moment, if it doesn't have good leadership or it's not very ethical, there's no potential for growth past a certain amount. It's kind of like a ceiling, like preventing it from growing to its fullest potential. So public versus private companies. A public company is listed on the stock market and they're traded, people can invest into them, like the general public, and normal investors can do so. And a private company is not listed on a stock exchange, so you can't really invest into this. And the money they raise is usually from venture capital firms. And these are companies which invest in like startups, which are privately listed, or hedge funds or accredited investors, people with access. Only a limited number of people can invest in these companies. So the companies that most of you guys would be investing in are public companies. So what's a stock exchange? A stock exchange is a marketplace where stocks and bonds are bought and sold. And there are 13 registered stock exchanges in the US. NASDAQ and the NYSE are two of the most popular stock exchanges. NASDAQ, I believe, refers to tech companies. And this is like a lot of established companies are on the NYSEs, and more startups, upcoming companies are on the NASDAQ. And the NASDAQ index is more volatile than the NYSE as a result. And the money you make on stocks is called a stock dividend. And this is basically the profit or surplus you make off while investing in a company. And Robinhood and Schwab are two places where you can begin investing in a stock exchange. So if you want to begin investing, those are two places. So SWOT analysis, I'm sure a lot of you have heard of this term. You can apply this to your day-to-day life, but it's also a great tool to use while investing. The S stands for strengths. So you would list all the strengths of this company, kind of like the pros list. Weaknesses is all the flaws you see in the company, any negative characteristics, whether it's qualitative analysis or quantitative analysis, anything bad would be listed here. Opportunities are things you see where the company has a potential for growth, and threats are either external threats or internal threats, which would prevent the company from reaching its highest potential. And for example, let's do a SWOT analysis of the Simi Valley Public Library. So some of the strengths are that it's free, it's available to the public, and there's lots of info available. But some of the weaknesses are that not every book you want will be here, because it is a public library, it is limited. Opportunities are programs such as this one, you know, an opportunity to expand. And threats include a new bookstore down the street, which has a bunch of books, which has like, I don't know, just a lot more resources than the library. That would be a threat, because it's like think of it like a company having a new upcoming business, which is serves as competition. Alright. Simple versus compound interest. I believe Ms. Tignac wanted to talk about this section. So,
All right. Okay, so, so some of you, if you have or how many of you have a teen checking or savings account? All right, so some of them might actually, the savings might give you a little bit of simple interest. So you might get a little thing saying, oh, you earn this much, or a dividend comment or statement. So simple interest usually is not much money. It's usually I don't know. Tim, what do you think the rate is on a savings account that is
You
simple
can
interest?
get, like 3 and 4% now.
You can,
Yes,
okay,
because, interest rates went up, so we're getting better
impacted,
interest,
okay,
yeah.
great. Now, would you have to actually go in and sign up on it?
No,
or is it
I just
automatic?
opened up a savings account the other day online.
Okay, perfect. So you want to check your statements because it probably has
Yeah.
gone up.
And you could just Google that on the internet, and it'll list all the companies, what interest rates are paying.
Oh, nice, okay, perfect. So simple interest rate is usually a smaller amount. And it's only going over for the month. Compound is where it starts adding. I don't know, maybe Tim, you could explain this better.
No, you're doing it.
No, come on, come on. So compound interest, yeah, where it starts building up. So on the next slide, we're actually going to show that impact of the longer you have an account, it compounds. So even if you started it, so I'll just give you an example. So my grandma, when I was little, she put accounts for each of us in just $200. But when I finally took that account out, it was it ended up, it was 18,000 by then, and it helped put a down, towards a house. So when you think of those, now I think back, I'm like, ooh, if I left it in there, it would have gotten so much bigger now as a few more years go by. So you can kind of figure out what this is with the calculation, but know that compound interest, the sooner you start an account and it starts the ball rolling, it adds up much higher of an amount than a simple interest. So on this one, the impact of when you start investing, and that's why it's so important that the Youth Employment Service really wanted to teach you guys to start investing and saving earlier, and then utilizing compound interest. Here, so maybe 25, but honestly, you guys are younger than that. I'd say start now. And she was talking about the Roth IRA, and then if you do get a job, even a part-time job where they do have any kind of a 401k, then you want to do that match and start that, because then it is tax-free if it's through your it contributed a total of 48,000 and only, made a little over 100, but look how much this was. And then it went up to over 500,000. So definitely you can kind of see how much better it is if you start saving.
all right, so what are bonds versus stocks? So I'm sure you've heard the term bonds, and you might be wondering what that is. And a bond is basically a loan given out to either a person, company, city, state, or nation by the government. And if the government needs money, they're going to issue bonds for a fixed amount of time. And this will be demonstrated in the activity we will be doing later. And it pays the buyer of the bond interest and pay the principal back at the end of the term. So let's say the government issues a bonds for around like 5 years. At the end of 5 years, whatever money you make, whatever interest you make will be your profit. Stocks indicate ownership of a public company. So a percentage of that company is now yours. You're one of the stakeholders. The company's decisions affect you, and you will be making the money that the company makes. So a bond is just a loan, while stocks actually, they signify commitment and ownership. Bonds give less returns, but are a lot less volatile. So they're a safer option if you'd like to start investing in. So can you start investing now? This is a big question we've all been waiting for. And yes, you can start investing, but you need to know a few things before you can start. So you need a checking account. This is a bank account that gets interest. A lot of people have them. An IRA account is a long-term investment account, and we talked about Roth IRAs and custodial Roth IRAs. A Roth IRA is typically what you would have, but if you would like to start investing a little younger, you can have a parent or an older sibling open a custodial Roth IRA for you. You can start investing in the stock market, and we talked about what this was. And to do this, you can start on various different platforms which have access to the stock exchange. You can also open a savings account, and this is an account where you save for the long term. A custodial account, we talked about this, and you can also get creative. There's cryptocurrency as an option, and there's many new things that are coming out for you to start investing in. I know there's like NFTs and stuff. We're not going to cover that really, but if you'd like to do more research on different ways to invest and start investing, that's great. So that's it for our presentation today. So now we'll be moving on to a fun, quick activity. While we're waiting, I'll just give like a brief description of this game. It's basically, it covers almost everything we talked about in this lesson. So it starts off with like a bank account, then it goes to like investing in the stock market. Then it goes to like buying bonds. You can also invest in like commodities such as cotton and stuff in this game. And I was trying it out and it's really fun. So okay, so we're gonna start the game. All right. Okay.
Oh my god, the computer is so good.
The computer is very good. And at the end, you will see why the computer is very good. It kind of does a reveal of how it invests.
Because it's a computer.
Yeah, but it knows. Okay. Okay, is it working?
Oh my gosh, so bad.
All right, so where is everybody at on the game?
Are you all like, are you still on the part where you have a bank account and you're just putting money?
Yes. Yeah.
Okay, okay. Oh, the computer's now not winning anymore.
Who's winning? What? Oh, come on.
Somebody's doing really well.
How? I didn't do anything. How do I even invest? I'm pressing green buttons. $500.
And Shreya, I don't know if you want to help.
Yes, I can help them.
I got it. Now I'm
Is it
waiting on-
working?
I'm waiting on something. Oh, it's working.
Is it working now? Yeah, okay. Every time someone's like, they have to resume it again. Yeah.
Okay.
I actually went out today.
No, you're good. You just have to use the code.
I keep reloading thinking it's not gonna be here.
The game gets harder to keep going because it introduces more and more types of investment, and those are all really great. So.
And wasn't good. I mean, a lot of days. What is? Oh, yeah, a lot of days. That's my. You saw 137. I'm below that. It's so hard.
I know, it's hard.
How much the book?
600.
2022. When is on?
I'm gonna buy your book. It's
Oh
so
my gosh,
good. I
thank
love
you,
it.
Dad.
So much.
It's.
I wanna support it.
I mean,
You told us what else are you and bought it.
Yeah, I'm gonna be.
That's how you get publicity. That's how you get people to buy your book. You tell them straight
I
up.
mean, that's not though.
You should get proud of that.
It's really
I
good.
saw it in the 8 back in January.
I was like editing it a lot, like before, it was ready and I was editing it.
It's really impressive. The graphics are good. It runs the slides.
Oh, yeah, it's the same person making them.
Crazy. Oh my god, all my stocks have been bad.
I know, that's how the stock market is.
I'm never buying stocks now.
It's so scary about the lose money, you can just feel awful.
Okay, so you guys have 2 more minutes to go.
Yeah. Let's see, anyone can beat the computer.
There's no way, but I can get second to it. I spent all my money on stocks now, I'm broke.
I mean,
I should
you
have taken your
learn
advice.
from mistakes.
I got greedy. I saw it and I was like, oh my god.
I didn't see the government bonds, that was.
One of them, oh my god, one of them was, I'm losing $737.
I lost more yesterday when I was trialing it, I lost
Oh, I
1,000.
I lost 10,000.
Oh, but you took the risk. To like.
No, I just meant I said I lost 10,000.
Risk taker.
Oh, yeah, risk taker, a good
I
trade.
haven't done anything risky, actually.
Mhm.
I've done no risk. Certificate of deposit.
I love the certificate of deposit. I just don't have the patience to wait for it to like go through.
Oh, don't forget the government bonds, I didn't see.
I love
that.
the government
That
bonds.
years, like, maybe the 10 years.
Oh, I do the 5 year?
1 minute,
Yeah.
1 minute.
I only, 1 more minute.
Ooh, I keep receiving money, it's like in real life, I just accumulate money,
That would not.
the good things.
You guys weren't going.
I don't know why I'm like-
I was, I think, certificate of deposit, 15%. The interest rates on a house were like.
I just also.
Oh, okay. Wow.
What am I doing?
Did you hear about that? You knew about it.
What?
Michelle and I.
Oh my god.
We got a big time home buyer.
You better more.
And 9%.
Please.
So much to 9%. And we bought a second house. We assumed the first that people had. So we took their first mortgage, paid it off,
Oh, no.
and then we got a second at 17 people. Yeah, interest rate was so high. Well, you know, now people are. Oh,
Okay, you're doing really good.
Yeah, back in the day.
Yeah.
I mean, honestly, I didn't.
30 seconds.
Oh my gosh.
But I know it's, I know it was a long time. 31 seconds? Yeah.
I just sold all my stocks. And I went to the 10K. You're right. I was like 10K. I'm
Did
leaving.
you buy low, sell high?
I wasn't really thinking. I was just like,
Maybe.
okay, I know, I tried doing
Maybe
that.
that's your problem.
Yeah.
Yeah, I tried doing that. But then I just got lazy, so they started selling buy on the way. And then I changed it, I turned it to like 25, so by 25 shares.
Final.
Final. Okay, let's see.
Who's getting the light up?
Yo. Okay.
The computer is.
Computer's in first place, almost $400,000. Yep.
What?
Rico is in second place, almost 300,000. Yeah, it's in the third place with 200,000. Rover is in fourth place with 1,809,000. And then Ella is in fifth place with 185,000.
185,000.
Yeah.
What you did?
I got
Does it have my name? Had 225,000.
what's your name?
Vasu.
Did you do solo?
No, I thought I was in for anyway. Well, it didn't take you
225.
250 or
Oh my
something.
god, just like to the your voice.
It's ended.
That is so cool.
I
Is
think
it?
it's next, yeah, 30,000.
You would put in, third
It's that
place.
way.
then.
Oh, yes, I see.
It's-
Oh my god, that's what happened the entire time.
Light of yo-yo.
Why can't you?
Oh my god.
I felt that.
That's fine. No, it's ours.
Okay. How about we do these two? And then.
I'll live.
Oh, and before we do our raffle, I just want to say, I think when I was playing yesterday, the computer invested like solely in index funds.
Same.
Yeah, you too?
Yeah, it shows you.
Oh, yeah, so it invested solely in index funds, and that's how it's made a lot of
Really?
money. It's a lot more stable and less risky, but if you invest in stocks, like, and you're very good at it, you can make a lot more, but yeah, I just want to say that.
Okay, so we have a couple more before we do the Portrait book. So-
Okay, all right, so,
Oh, this is for the book.
oh, this is for the golf league and the.
Okay, so here, the first, this one's first.
All right, so the first one goes to 2404054.
Is that you?
Oh, yeah, that's me.
So,
See you guys. I mean, we're. Thank you.
okay, and then we'll do.
Final
Oh,
winner,
yeah.
2404058.
Okay.
That's me.
Okay, so now, we're putting everything.
But
Everything
everyone
back
back
in.
Cool.
And, it will be Sharia's book.
We want to be so bad, everyone.
All right, guys.
Should I got your autograph too? Can you?
Oh,
Oh, no, she's not allowed to sign it.
No, no,
Come on, autograph.
2404055 is the winner of this copy of a team guide to
Who is
investing.
it?
Yeah.
And then anybody else that wants it, it's on Amazon. Amazon, like, we're selling it.
Tax document, because it's so valuable.
Oh, wow.
And then do you want to do yes. So those that are in person, we're gonna do a quick raffle while we're getting this loaded up.
Did everyone get a raffle ticket?
Yeah. Okay, what do you want?
Oh, yeah.
Okay, so this were. That's $15.
That sounds good.
Okay.
All right, so the first winner is 2404056. Oh, yeah.
Winner. Wow, that was well worth it.
Yeah.
Look at the return on his investment.
Right. Okay, and then let's try this. None of us.
Oh, and by the way, the winner of this game will be getting a light up yo-yo.
Well, we'll kind of,
Yeah. Yeah, oh, oh, yeah, okay.
Yeah.
Okay, let's do it. I think this means like there's those who win, yeah. All right, so the second winner is 2404055. Yeah.
oh,
I'm sorry.
I know.
Okay, Drew's next.
Wow.
I can make it.
2404057. Yeah, all right. Thank you everyone so much for attending today. I hope you learned some important information on the basics of investing in the stock market and had fun in the game. And for our in-person attendees, thank you so much. And I hope you guys enjoyed the little goodies we gave away. And
And
For the
don't
people-
forget next week.
yes, there's another workshop next week, Thursday, 6 to 7 p.m., same room. So for those people online, we highly encourage you to attend in person. We have snacks, we have a giveaway. It's a lot of fun. So
What's the one next week? What's the name?
Invest in your future.
invest in your future. It's gonna talk about retirement, financial safety and stuff like that. This is not really.
Building credit.
Yeah, building credit too, that's really important.
Good.
So yeah, thank you all so much for
Thank
attending.
you. Thank you.